the amount of money flowing from Chemist Warehouse people into property and venture, I think Chemist Warehouse is going to prop up half the economy for a while.
We were all waiting for the Canva IPO, but here it is. Chemist Warehouse is funding a lot of VC deals.
So if you know January and February is dead, how can you utilize those months to learn about the UK, learn about the US, learn about other markets where, the foot's off the gas for maybe a couple of weeks?
I like that line that we have, there's no good news, there's no bad news, there's just news. I think taking the emotional angst out of it, calling a spade and saying what it is, and remembering that your shareholders and investors are in the boat with you. Like, they have skin in the game where they will help you, and they are some of the best proponents to go to help you solve problems. On that note, good morning, everyone.
Good morning.
That is true. And Aaron announced that he's bought a house, him and Marin. So he's entered the back into the property market after being on the sidelines for a bit.
Yeah, so went unconditional this morning. So by the end of November, we'll be bumping in.
So
bloody stoked. I'm just glad to have my weekends back. No longer looking at houses and making offers just to feel dejected. So this one came through.
I don't have anything exciting. That's boring. Oh, I did. I made the top 250 young entrepreneurs in Australia list today.
Very good.
Awesome.
As long as it's not Forbes, because Forbes is the precursor to jail time.
Like, thank you, but no thank you.
Yeah. So if you're not going to jail, that's good.
Oh, well done, Ash. That's bloody awesome.
Yeah, I just got an email and I was like, okay, thanks. That's cool.
Well, I was at the Moreton Bay Business Awards last night, and one of our businesses did not win, so I left in a huff early.
They won last year, though.
And the year before.
I was going to say.
Statistically, it was going to be hard to do it 4 years in a row. But
was it cocktail in the end, or was it just...
Yes, it was supposed to be, but there was a handful of people like me that had put no effort into their dress, and so we sort of formed a little club in the corner.
I was thinking about that last night. I missed out.
Yeah, what did you... So you just wore chinos?
Just chinos. That's all I got.
That's right.
That's Brisbane formal, Ash.
Yeah. No, I was well acquainted with that last week. Yeah. The best bit of this, and you'll love this, is that I don't subscribe to the advertisers, so I can't actually read the article.
It's a great marketing strategy. I think we should start issuing awards.
All right, let's got a good size agenda here today. Let's just jump into a quick recap. So Strongroom AI, which has disappeared from the news a little bit, Joe Zhu has come out that he's just completed a raise. They've added 1.2 million to its coffers after receiving support from wealthy individual pharmacy owners who know and back the product, as well as private investors in aged care operators and hospitals. The existing investors, venture capital firms EVP and Artesian, didn't participate. The proceeds from the capital raising will go towards accelerating Strongroom AI's product development, completing the transition to a cloud platform, and expanding as their commercial partnerships within the pharmacy and aged care sectors. This, if it works out, this will be one of the very few companies that have gone through what it's gone and come out the other side. And I take my hat off to him.
I'm so curious to watch this unfold. So it's quite exciting, actually, to watch. Like, I feel for what EVP went through, but look, it seems to have maybe phoenixed. So,
yeah, well, if people that use the product and from the pharmacy sector have invested. The only interesting thing with the pharmacy sector at the moment with Chemist Warehouse, the amount of money flowing from Chemist Warehouse people into property and beach houses and even venture, I think Chemist Warehouse is going to prop up half the economy for a while.
Yeah, we were all waiting for the Canva IPO, but here it is. Chemist Warehouse is funding a lot of VC deals.
Anything you're in, Jack, Ash?
I thought it was quite interesting. So they said 2 of the 3 original co-founders left the business. Like, I'm surprised it wasn't 3 out of 3.
No, that's a really good point. I wondered who got out unscathed and was able to prove that they were a deaf, blind, mute in the corner and knew nothing.
But then if you knew nothing, do you want a person that knows nothing about the business in the business?
It's a good question.
Hopefully there's some trail there of them screaming at everyone else going, this is all wrong. But,
yeah, I did see that.
Well.
Ash, there was an article that actually came out yesterday afternoon that I added in quite late, but it was an article in the AFR, in the Chanticleer, It says, Australian VC is a snowball rolling downhill. We ain't seen nothing yet in Australian startups and venture capital. Money's flowing in, which will bring the ideas and keep Australian startups funded. Sam Cecilia, Hostplus Chief Investment Officer and Australia's biggest venture capital backer, says the environment for venture capital is unbelievably positive. Super funds, especially his own, are writing checks and follow-on checks, while a new generation of VC backers has been spawned by one-time startups, Atlassian, Canva, WiseTech Global, and others. Many years ago, the VC sector tried to start up, but the root cause of the problem was that when the capital dried up, there was no follow-on capital for them. Cecilia said, super funds are now in a much better position to provide that follow-on capital. He's in the thick of Australian VC scene, piling into repeat raisings from Blackbird Ventures, Brandon Capital, Cathona Capital, Squarepeg, among others, and is arguably underwriting the local VC scene. Cecilia says he will be directing more dollars in the future to venture capital. I thought that was interesting. I think it's true, absolutely at the top end. But a lot of super fund money seems to be going back into the originals that are already much larger. I don't think the world needs many more data sets that demonstrate that returns drop off with size, and backing the right emerging managers is where superior returns lie. I'd love to see super funds get back to what some of them did, which has emerging manager programs, because otherwise there's not going to be the next generation of VCs come through if they're all stuck at the small ESVCLP phase.
I also think, Donna, would be great, even if it's just to get to know them. So have the door open to start to build that relationship as an emerging manager. Like, it's hard to obviously get meetings with these players, but in order for us to be on their radar, and even if they have a stance of we don't invest until fund 2, as an example, not saying that's my opinion of right or wrong, but the ability to actually build that relationship with these players to make that a possibility for a fund 2, I think that is really important as well. And I'm not seeing that ecosystem thrive the way I'd love to.
Yeah, we had actually met with Sam. I mean, the virtue of having Lainey as part of Tribe early on was her relationship with Sam and Con, and we had a couple of meetings with Con and one with Sam, and we were able to have those conversations. And yeah, Sam did express that understanding that the best funds come from the emerging fund managers. And at the time, Hostplus was exploring an emerging managers program, which ended up not going ahead. But I think on the back of this, it's time for us to, I'm going to definitely shoot Sam a message and see if we can catch up again.
I mean, to be fair, though, we were probably delusional.
Absolutely delusional.
At our age and our phase of that life cycle. And Ash, I think you're partly right, but for us, it's more been we're going to go off and get ourselves into a position where we are more attractive. But I do think it would be nice if there was like 2 to tango, where these larger funds actually were very clear that they had some emerging manager programs. They were very clear on the criteria. They were able to give you like a checklist and say, you are going to need to have all of these things in place before we can even consider you. I think that's the work that they could do, because then that would motivate the next breed of funds to go, okay, I understand where the bar is. I understand what I need to do. I'm gonna go work my ass off to try and make that happen.
Yeah, this is where I think there's a gap in the market. I think there's an opportunity for an intermediary fund of funds that raises the significant licks of capital off the Hostpluses of the world and then deploys that as a fund of funds into emerging managers. I think this is where Blackbird could play a role, but we were absolutely naive when we went in. But there is a model there where you can structure it with a sidecar fund to make the check size make sense and the fee structure make sense. I like the last little comment there, directing more dollars into the future of venture capital. I'd like to think by that it is maybe a hat tip to emerging managers.
Well, let's see if some space comes for emerging managers, and see if emerging managers can get themselves into a position where they're attractive. But of course, a lot of VC dollars are going into AI, and a lot of portfolios are implementing AI. And we certainly on this little podcast have been singing the virtues of AI, and that I guess when you write a song using AI, that's titled, "If you don't think you're fucked by AI, you're an idiot." You're certainly putting out a certain vibe. And it was interesting to see an article that came out that OpenAI's latest breakthrough is a sobering reality check. OpenAI's path to build super intelligent machines is looking even fuzzier. The latest sign came from an embarrassing blunder by the company's leading scientist over the weekend. This is 2 weeks old. ChatGPT just found solutions to 10 previously unsolved Erdos problems. The company's vice president for science, Kevin Wheel, breathlessly posted on X in a post that has since been deleted. It turns out it wasn't true. The company's latest model had simply scraped answers off the internet and regurgitated them as its own. Many of the infamous unsolved problems of the mathematician Paul Erdos are listed on the website, and OpenAI's researchers assumed that no one had figured out the answers to those that were listed on the site. But the website's administrator replied on X that he simply hadn't updated them on the site, and they had in fact been solved. OpenAI has long suggested that the large language models underpinning ChatGPT, which scrape reams of data and synthesize these into clever answers, offer a viable path to general intelligence. That's the theoretical thresholds where machines become smarter than humans. But this error is a stark reminder that large language models underpin the generative AI boom, mostly pretend to be good at reasoning. They're still glorified pattern matching tools. So it's not actually as smart as we think. And I think that is sort of a bit of a pattern that's starting to occur.
I love that the people behind GPT have the same hallucinating type responses as the system itself does. Did you guys see the memes that have been coming out recently? Like if GPT was a human and all the sorts of things. And one is like, yeah, these mushrooms are totally safe for you. And then you see the person in hospital and GPT says, you're right. The mushrooms are not safe for you. Like the number of times I see GPT correcting itself and just giving contradictory statements, even in one prompt response, it's actually quite scary. But I think one thing, founders look at stuff where GPT get things wrong and then argue that as defensibility for their own product. But it's so short-sighted because of the exponential improvements that are happening. Like this is the worst it will be. But it is scary, like these kind of biases and regurgitation, and therefore how these systems can also be manipulated.
Yeah, I think to remind, I just pulled up, just remember all technology tends to go through a hype cycle, and we have to, I think, still end up in the trough of disillusionment before entering the true plateau of productivity. So everything sort of, the technology starts, there's a peak of inflated expectations in terms of capability and speed. And then there's a whole period of time where we have to get quite disillusioned. And then reality sort of steps in a little bit. So I think, like everything, it's just being mindful that we don't actually have intelligence here. We've got this thing that looks and smells like intelligence. And that's not to say that a lot of the agents that are being built out can't be incredibly powerful for doing our tasks. Just don't expect it to be at the level that would go and solve complex mathematical theorems that have never been solved before. Ash?
We all know that it hallucinates. It's partly why I think it's important to, in your prompt, be very specific about mathematics or anything that has statistics involved. We all know large language models are bad at math. It's a large language model. It's in the name. It's not what I think the best use case for. But I think you have to be careful when you're prompting. We've said it a million times. You have to check the data. And I always ask for citations, links to where it's pulling things from. And use a range of different large language models, in my opinion, to get the best output. But yeah, I wasn't surprised when I saw this. I was like, oh, okay, it's still improving. They're still working on it. As Aaron said, it's the worst it's going to be.
Yeah, user beware. Well, another post that I had seen, I'll share my screen here. I can't remember where I saw it. I think it might have been John Henderson of Airtree, but they had launched some AIs and given them direct access to a brokerage account to actually start finding patterns and trading. And this is the live chart. When I saw the post, it was around October 27th, where these two models were like going up and to the right, but now they're almost back to zero. And at least this particular algorithm, I'm sure there may be other AIs and algorithms out there, over this period of time, it hasn't demonstrated an ability yet to actually produce lots of easy money. Now, in my younger years, I screwed around with a lot of trading, options, foreign exchange, futures, did a lot of models. I even had 2 programmers that I employed at one point to program some rules. And on the back tests, you can pretty well get any model to work. What kills you is the spread and the brokerage. And okay, now we live in a zero brokerage world, but that's because they're making money off the spread. And that spread can often be variable. And then during times of volatility, that spread can blow out. And so your back test says, oh, here's the price. But at that time, because of the volatility, what is not shown is actually the spread between the buy and the sell. And it actually smashes you. Now, of course, this is over a very short period of time. And keep in mind that the best money managers in the world can only produce like 30% IRR. And so we've got to be a little bit mindful. But for those at home, it's sort of all models started at effectively $10,000. A couple of them very quickly started losing money. A couple of them sort of screwed around and have sort of been flirting with profitability. And then a couple of them sort of started to double over a couple of days, but now they've started handing back their losses. And so, you know, I think all of this is what a lot of people are going to be using AI for in the background. But I think what also happens is if the market becomes very AI driven, all these patterns sort of disappear because everyone's found them, right? And so
Same as ETFs.
But if there is an infinite money machine just to be made out of these agents, Ash, if you could do us a favor and just build us one.
Sure. Working on it. I'm working on it.
There'd have to be some in the gambling space, right? Like looking at odds and running pretty large bets over particularly horse and greyhound races.
There's people been doing algorithmic trading on that stuff then.
Exactly. But this would just be replacing teams of analysts now with AI.
Yeah. Well, just shifting gears a little bit, because I don't know about you, it feels like the end of the year is now here. I don't know why we don't just call it December and move on.
I've given myself next week to close any deals and that's it.
As the year's going on, there's sort of like, there are founders that are hitting it out of the park, and there are founders that yet again, another year have found it harder than what they thought. And then there are the investors on the other side of those deals that are sort of, I guess, looking at their portfolio. And Jason Lemkin did a post, which I thought was just worth touching on. What I see CEOs struggling at startups. Sorry, what I see CEOs at struggling startups do. They go dark, they hide, they lash out, they tweet about lots of non-work things, they invest time on tiny expenses, and they argue internally. What they should do is be present, be honest, be the rock, be realistic but optimistic, and communicate. You just plain grow faster that way. And I think that's right. And I think when we're looking at sort of any behavioral things happening, either in companies that we're evaluating or even in the portfolio, you sort of look to those behavioral cues. And actually, even though I can't say that there isn't a group of investors out there that shouldn't be investors, that are actually idiots, that don't understand humans and do things that end up delivering worse returns. But I think the majority of investors in this space are reasonably mature. They prefer regular, authentic, upfront communication, even if it's not good. And that's what builds trust. And when you are in a difficult position and then you've really got to go and ask for help, investors have limited time, limited means, limited whatever else. They are naturally going to go towards and try and help those that they have the most trust with. Now, on the point of being optimistic and realistic, it's a conversation I had with one founder the other day where he's like, well, I'm not allowed to be negative and I have to demonstrate absolute strength. Well, I think there's a balance there where actually authenticity of, hey, here's what I'm struggling with, but here's what I'm doing to sort of move through it. And I think those are conversations that are easier to support and react to than somebody that constantly just tries to sell you that it's all going to be okay without acknowledging what's occurring. You lose trust because you're like, they're a bit delusional.
I totally agree with that. Like blind optimism despite numbers and facts, like that's an alarm bell. But yeah, we've seen this where we see the social media posts of a founder talking more about anything but the business, and it's almost a precursor to us potentially later finding out that that founder has left the business or is no longer actively involved, or it's not going well. And equally, when times are tough, we do see the drop in comms. I think sometimes though it's not avoidance, it's they're just actually busy working the problem. Like I think of one at the moment that yeah, he's responsive on email, but trying to get time is difficult because he's on a plane everywhere trying to solve an ARR drop that he had. And yeah, I'm reflecting on myself with this. Like when you're busy and head down, I tend to forget the every month, just like clockwork, bang out the update regardless. And it tends to be the bottom of my to-do list because we have a deal or we have XYZ going on. And so you do eventually pay that price. And I like that line that we have, there's no good news, there's no bad news, there's just news. I think taking the emotional angst out of it, calling a spade and saying what it is, and remembering that your shareholders and investors are in the boat with you. Like they have skin in the game where they will help you, and they are some of the best proponents to go to help you solve problems. So actually even more important when times are tougher.
Jack, Ash?
I think something to add there that comes to my mind is like we can't promise the outcome, but we can promise the process. And when we look at some of the portfolio, one comes to mind is probably now the best in the portfolio, but the past 2-3 years prior, he hadn't delivered the outcome, but he continued to deliver the process. And now he's actually reaping the rewards. But the whole way through, maintained the trust and respect of his investors, and they still kept tipping in, even if it meant missing forecasts.
Yeah,
such
absolutely.
a good point.
Yeah. And it's difficult. And like you say, Aaron, we don't say these things from a position of perfection. Sometimes I'll see an email come in and go, I could have sworn I only got that email yesterday, but it was like 4 days ago just because of the rapid rate. But yeah.
And also, especially when you're quite active with the majority of your shareholders where you feel like you're seeing them or on the phone to them weekly, but then you can easily lose sight of a couple in the cap table where you actually haven't had a touch point in a long time, or your touch points have been about lots of other things kind of ancillary to the core business. So sometimes I think it's really, like you say, Don, that advice of using your calendar as a blunt instrument, putting it in there on a schedule and making sure you deliver on it consistently.
Yeah. You got anyone on this, Ash?
No, I just love my calendar. I'm a slave to it. So we all know that.
You're a nightmare with your calendar.
I think that's more of a reflection of you than me. Like, most people don't like conflicts in calendar. That results in bad business outcomes. But,
I totally concede that Ash could be onto something here.
No, but I have gone a step further where I have that trigger in my calendar, but I also have an automated email that I get sent with questions for my investor updates. I reply to that email. That email goes into an LLM, summarizes it for me, and then pushes it to Notion, and then that's in my investor hub. So even just trying to figure out I can get it out my head, because Aaron, this is one of the biggest things I took away from you is that transparency, whether it's good, whether it's bad, it's just news, just to give that monthly. And the feedback I get from our investors of why they love Tribe is our transparency and is the fact that we go so detailed on our deals and how we're going as a business. And so I've tried to take as much of that as I can, but also know that your head's everywhere. So how do you figure that out? So mine's part calendar, part automation, part AI, and how do you make that work for you?
That's a good point. And you remind me, Ash, so our investor event up in Cairns this week, hosted by Luckbeer, he talked at the start about why he invests in Tribe and what he likes about us. And one of the things was our reporting, and that the absolute transparency in our reporting. And because he's in a couple of different funds and syndicates, so he's actually been exposed to, he's invested in the same entity through different vehicles. So he gets the different reports. And he was saying that, he'll read another investor's report and it's all glowingly positive, and then he'll read Tribe's and it's much more like the wheels are falling off. Here's what's going wrong. Here's what we're experimenting. Here's how we're helping the founder. And I think that he shared with the group how much of a positive attribute that is and why it builds trust and respect. So I think your point there is spot on around being really transparent, sharing all the shit bits, not just the good stuff. In fact, I would argue it builds better trust by sharing what's going wrong. It's just so powerful as a mechanism.
I've also found that like with not just your investors, but also like your team members, like when you're at the front and you're particularly in the BD seat or in the IR seat, right? You're the one who is quite often getting the no, and that can really get you down. And so then you feel vulnerable, you feel that you're not doing a good enough job. But if you actually share those insights with the team of going, hey, I've made 50 calls, I've had one person pick up, it's been a rough day, but that one call was good and here's what I learned, versus not sharing that. And I found I'm someone who likes to perform. I come from an athlete background. And so I found that from an ego perspective quite hard. And so just trying to keep that top of mind, I think, is broader than just how you communicate with investors, but also with your, core executive team or key team members. I've been trying to keep that top of mind.
I answer your phone calls, don't I?
Not always.
I'm glad you're in that seat, Ash, because you just reminded me how much better my mental health is now that you're doing all of those calls.
Well, speaking of the year progressing fast on us, Jesse Wu did a post which says, why does October always feel like a huge month? I think it's because it's one of the only real months in a working year. So this is what Jesse's view was. January, not real, because good luck getting anyone's attention before Australia Day weekend. February, not real, because it's a short month, plus just slowly getting back into things after the January break. March is the first real month. April's not real because you can take 4 days leave and get a 10-day holiday between Easter and Anzac. It's a no-brainer. May becomes real. June is both real but not real because it's end of financial year and everyone's doing end of financial year and says, let's visit next financial year. July becomes real. August is not real as half this, certainly on the investor side, head off to Europe. Italy, France, Spain, Greece. But I'll reply to your email on return. September is half real because when you've come back from most of August away, you're catching up with the 1,000 emails that you missed. October is the most real. November, still real. But then December, not really real because we're heading into silly season. So by her count, 5.5 real months in a working year. Do you agree or disagree? I broadly agree that I think, like, we had a pitch this week that they've just started and she wants to have it wrapped up in November. And it's like, well, we will try, but you get a couple of weeks into November with something new. Yeah. See you in Feb.
It's driving mental. Like after having worked in New York for so long, this is still one of the hardest things for my brain to comprehend. And so I think like my take on this is like, yes, it's real. So as a founder of a business, how can you diversify your pool? This is where having international markets and different BD opportunities going. So if you know January and February is dead, how can you utilize those months to learn about the UK, learn about the US, learn about other markets where, the foot's off the gas for maybe a couple of weeks? And I would argue that June, July, August are all not real because it depends on, what side of the European summer you want to go on.
Yeah, I agree, Ash. I would say what Jesse's describing is real. I think in our world, it's even worse. I mean, the 2 months she mentions to getting work done, like March and June, that's when we have our US mission and our UK mission. So we're off on the other side of the globe. But in the investor world, like we know, most of them disappear from Melbourne Cup Day on. So November's a write-off. They all disappear to Japan for our summer. They're in Europe in our winter. In between, there's some trip to Bali or Fiji, typically March or September. And there's this continuous pattern. So we have these very narrow windows in which to get deals through with our investor base. One of the reasons why switching to a captive fund is a game changer for us.
I totally agree with Jesse. I think it's 4.5 months just because of Melbourne Cup in November.
Yeah, but I think so with founders, I would then suggest you've got to be careful, right? With these things, this whole discussion is somewhat satirical, but partly real if you are trying to raise dollars. Like anybody that was to start a raise in November, I think that demonstrates that you're a cupcake short of a picnic. But there are some things that you could. Want me to go with something different?
I'm more choosing crackers myself in a picnic.
I've never heard that one. Cupcake.
Well, I would just be concerned about your ability to look at the world and be somewhat rational, and are you therefore backable? But maybe I'm being.
Well,
this is a very judgmental group this morning. But anyway,
in that particular founder's defense, they had spent most of their life living overseas, and to Ash's point, the rest of the world doesn't follow this pattern.
No, they're still in October. I'm not having a crack at them. Like we've still got. That's fine.
That's true.
I'm talking about if it was like.
Well, Vicky Forrest talks about this though for Aussie founders. She says like spend December, January, Feb over in the US because nothing's happening in Australia. And that market, everyone's working. So I think it's good advice is don't just think about the Australian market. Look at US, UK in those windows.
In the US, don't go between Thanksgiving and Christmas though.
Yeah, very good point.
Instead.
Yeah, that's the rational, pragmatic thing I was trying to share.
Oh, okay. We got there. Good job done. Great idea.
We just had to have cupcakes at a picnic along the way.
I don't take cupcakes for a picnic. Am I missing out?
Yeah. You don't have kids, Ash.
Now, speaking of the US, some sad news. A friend of Tribe, Holly Cardew, announced that Carted is shutting down. Now, Carted started this, according to Startup Daily, started 4 years after raising 13 million in one of Australia's largest seed rounds and pledging to change how people shop online. The Carted Wishlist app, which informs shoppers when coveted items go on sale, is going to close down in October. We love building Carted with you, but we haven't reached the scale. We need to keep building the experiences you deserve. After reviewing strategic options, the decision was made to wind down operations. Always sad when something like that happens. There's generally always a lot of lessons. Obviously, that $13 million raise was in the peak bubble time, but it does highlight that cash alone does not help you find product market fit.
Yeah, this is sad news. I've known Holly a long time, like absolute legend. She was living in Brizzy for a while, and we saw her for coffee when we were over in the US in March in San Francisco.
She's always supported our missions with founders over there, been a really good person to support people coming over.
Yeah, she has a ton of advice for Aussie founders that are heading to the US. I'm curious if this will bring her back to Oz or if she'll stay on. I think the vibe from our coffee chat was she's pretty keen to stay on in the US, I think. But sad news, but good on her as well for, again, sharing it publicly and posting about it. It's good for founders to understand these things and for these stories to be shared.
Yeah, well, we look forward to seeing what she does next. I was in a bit of a hurry, so I don't have anything really good philosophy corner, but just remember you can't pour from an empty cup, and self-care is important. But whilst you can't pour from an empty cup, you can certainly throw it at someone. And I think that's just really important to keep in mind.
No comment.
Okay. Theme of the week, Ash.
Jack can go first.
Theme of the week, Jack.
I think yesterday we had the quarterly investor update, and I think that just goes back to delivering on the process and continuing to build trust with your investors. And then even just touching back on Australia's shutdown from Melbourne Cup to Oz Day, if you do the work and deliver the process, it actually doesn't matter where in the world your investors are. And we've seen that like some of the early LPs in Tribe can be anywhere in the world. We'll send them a deal. They trust what we're sending through. They send Ash the commitment straight away. So I think the takeaway there for founders is like keep delivering the process and hopefully the tide will turn and you'll get the rewards.
That's a good one, Jack. I like that one. I think for me, theme of the week, that comment I made to you on the plane the other day, Don, like VC is a game of binary outcomes, but the bit in between is this messy soup of just grey areas. And like I'm thinking about one of our deals that's restructuring at the moment and how much back and forth and negotiation goes on in something like that. And then all the messiness that's, that everyone talks about these awesome revenue charts. We've got some in the portfolio that just have these phenomenal ARR growth curves, but behind the scenes, it is just messy grey areas. People are messy. Humans are messy. There's emotions, but all of these boring things like structure, hiring processes, they help remove that grey area. But geez, this is a long game.
Yeah, and it's that long game that links into mine. Again, I think it's a common thing as you get to the end of the year, but it's maintaining energy. And a couple of portfolio have had some great wins, and then a couple have had some very frustrating setbacks. And it's not like the first setback; it's like the fifth setback in a row. And there's the Buddhist principle where happiness comes where you can sort of behave like everything is life and death whilst knowing that nothing really matters at all. But that's a little bit of a challenge to still be having that energy, to be really passionate, to be leading out front. But sometimes when you're taking the third or fourth or fifth sort of hit on the same issue, it can be pretty easy for a human to lose perspective. And for me, it's you don't want to become delusional, but you don't want to let yourself fall below a threshold. And across the portfolio, just one of the things as we're coming towards the end of the year is just how do you make sure that energy's still there, that passion's still there? How can you laugh at a few of the frustrating things? And just like all parts of the life cycle, you tend, as the life cycle goes on, to look back at the earlier phases with fondness, thinking that they actually were not as bad as you remember. That's partly because your brain. And I think getting into that practice of actually today is going, if I'm in that difficult spot, today is actually one of those days where I'll look back and go, for whatever reason, it either ended up positive, or if it didn't, it ended up in a lesson. And I think part of it is having the strength to reach out and communicate with others and to just say, hey, I'm just sort of struggling a little bit on this particular one, have that convo and foster those trusted relationships. And that's what we try and provide for the portfolio. But it's a difficult position, right? Because we, at the end of the day, have a fiduciary duty to our LPs and our own money. And we have to hold people to account, and we have to, at the end of the day, drive returns. But I don't think you need to be a dickhead about it. I think there is that space in between to say, I'm going to help you and hold some things accountable and shine a light on some decisions. And without being too much of the, I told you so, what are we going to learn from this? And just make sure you don't get stuck in a trough.
Think about that, founder. I like that, what you were talking about there, Don. I was thinking about having conviction when others don't, but knowing at what point is that actually just lunacy versus you see something in the matrix that others don't. And I think thinking of that founder in particular and our investment in that versus, I guess, maybe what some other investors see. I'm 100% of the faith that we see something others don't. And
this game is about being contrarian and right. The only problem is when you're in a small ecosystem and there are some entities that have bureaucratic ownership structures or bureaucratic sign-off structures that take a lot of comfort in the herd. And it's like, oh, so-and-so's got this concern. We must all have that concern. It's like, well, no, we don't have that concern for these various reasons. And so, yeah, it can be difficult. You've got to try and work in an ecosystem and try and be good citizens, but then sometimes say, no, you're wrong.
But we're aiming for those top decile returns. That means we have to achieve that, be in things that others don't see. So time will tell.
All right, Ash.
I thought you might have forgot me. My theme is human connection. I think, it was great to be up in Brizzy last week. Got to catch up with Aaron.
Yeah, we had I really enjoyed our chat. I thought it was one of our best chats so far.
Yeah, one of us had a conflict in the calendar.
Oh, well done, Ash.
In my defense, the only thing in my calendar was our catch up, Ash. However, some things crept into said calendar. So was it a conflict or was it?
Look, I'm going to let you take that one away and reflect on it. Anyway, so human connection. I think there's been more and more conversation, particularly this week, around the importance of human connection. And as we get more into this AI hype cycle, there's more agents. It was a really good reminder of that importance of, even though we catch up on the phone, we catch up on video, that there is something really special about that. And I've had a couple of very interesting conversations this week around the org chart of the future, where most companies will likely have more agents than humans. And so how do you enable culture of a company to be a part of an agent's persona per se? And yeah, that's just something where I've really been reflecting on how great I left that kind of meeting with Aaron energized. How do you actually see what the org chart and a culture of a business move into in this next phase of evolution? And yeah, it's just been something I've been contemplating, and Aaron, as I've been working through what we can automate and what we can leverage, AI workflows for as part of our business, trying to be conscious of where that human connectivity, whether that be team to team member to investor, investor to us, is important and is special, and not removing that for ease. So that's, just been something that I don't have answers, but it's definitely conscious on my mind, and something I'm trying to figure out. How do you import the culture of a business into the agents and into the workflow, so that it does still feel human, whether you're on the external of that or you're the internal.
Yeah, cool. Makes sense. Well,
I like that.
Let's jump into Ash's favorite segment of the Sharts. So this is a chart of the satisfaction of sustained dealer profitability. Now, where this comes was actually our investor lunch up in Cairns. One of Luckbeer's clients is a motor dealer that has a range of different brands, and he pulled up this chart. And what's really interesting is the huge variability. Toyota and Porsche, 100% of their dealers in Australia rated them being happy and satisfied with the percentage, with their profitability. Volvo and Jeep, 0% of their dealers. And then it's like everything in between. Like the average across all brands, like 36% were satisfied with profitability, but it's almost like a venture distribution here, that the satisfaction is accruing to the top. So it goes Toyota, Porsche, then Lexus, 93%, Isuzu Ute, 72%, GWM, Kia, Ford. But what was interesting in the convo is he was just talking about the Chinese brands that are coming, and Australia has no idea what's about to avalanche on our shores due to our open borders with these things and total lack of control of some of the stuff. So he painted a picture of quite amazing what's coming, and then we're showing videos of some of these Chinese cars and the price point and what they do, and you're getting close to Rolls-Royce sort of comfort and features for 40 grand. So it's going to be
AI embedded and all sorts of smarts. And
yeah, so you were showing this one that's fully embedded. You're driving along and you say, "What's that big building on the right?" And the AI takes the photo, goes in, explains to you the building, gives you the history. Like, it's just all this random stuff that would keep my 4-year-old brain occupied. But all of that integration is here.
Yeah, that's a lot of security risk comes with that. So I hope.
All I give a shit is, do I have to hold the steering wheel a little less on my drives to Redcliffe? They can take my data and they can take my conversations.
my kids overheard me talking to GPT today, and they said, "Dad, when this thing comes to rule the world, you're the first one to be killed."
I could just imagine Aaron singing to it. I love you.
That was a separate conversation, actually.
Yeah.
But anyway.
So this is the Consumer Price Index. I think all listeners in Australia should be very worried about this. I've been saying for a few times, I don't understand why we're going to have interest rate cuts, just with the world I live in, especially from property development and some of our venture stuff. There is so much activity happening that I think that those interest rate cuts we have had will be seen negligent. And now when you look at this chart, we obviously had from 2014, just before COVID, inflation was falling and it was a real problem for the RBA. Then we had the big spikes. It has been falling, but now it has spiked up. Now, it's not fully a trend yet, but last night I was sitting next to our town planner. He has never been busier on the residential, commercial, low end, high end, and he operates across all sorts of sectors. And given how much Australia is driven by its property market, and all we do is seem to trade properties like monopoly at ever increasing prices, that's our national sport. I just don't see why there are any signals that say that we're going to have price increases. That we're going to have interest rate decreases. So I'm certainly trying to get my mind set for a higher inflationary environment, which will also include higher borrowing costs. And that's important to anyone with variable debt. And this was a chart I saw somebody do. So this is taking historical currencies from the Romans, the Byzantines, the Islamic caliphates, China, Spain, France, Britain, when they were like at the top of their game. And it just plots out the devaluation of all currencies over time. And essentially, the simulation that we live in is just this reoccurring SimCity of an empire coming to rise, partly on the back of their currency, which then gets devalued to zero, allowing somebody else to come in and take their place. And if you look at the US, at the rapid rate they've managed to screw it up. So one of the things I really want to work out a way to instill in my children is understanding the difference between sort of assets and cash and currency and all of those things, because I don't think it's really understood. And for listeners at home, I'm trying to do a better job of explaining the charts. It's all down and to the right. Every civilization that was in power over time, their currency just gets totally devalued through various means, and that gives rise to the next empire to come and screw them. And we're watching that in real time with the US. So anyway, make sure you've got your caves and your tinfoil ready. Now, I thought this was an interesting chart. So this goes back to the 80s of the average household size. So the number of people in a household, which has fallen from 2.8 down to below 2.5. So all of these, this is the type of thing that is contributing to some of the housing dynamics, because there's less people living within the houses. And so for a population that's growing, we need more houses than we did in prior time, because we're not sharing as much. And I think it's like if you go to any hotel or rural treaty type thing that was built in the 70s, 80s, or even early 90s, they generally are twin bedrooms. Like it was commonplace, whereas now it's not very commonplace to share with a colleague. Aaron refuses after obviously the incident a few years ago, but he's staying silent. He's not engaging.
I was laughing. I was muted though.
Did I tell you I was yelled at by a council officer yesterday trying to get the DA stuff through? I think I told Jack.
No.
Yeah, well, so here's the lesson. Probably don't take your lawyer. But in my defense, I was frustrated because I was going around in circles with these people. And so I ended up getting the boss of these people into a room, plus the lawyer. With all due respect to the lawyers that may be listening, you can come across a bit punchy, you can come across a bit aggressive, and suddenly the hackles came up and this council officer was like, oh, I fucking told you 3 years ago that we weren't going to. And then suddenly I'm like, I'm not in Kansas anymore. I have no idea what's just happened. It turns out he was briefed poorly by his staff, and he thought I was coming to say I don't want to do any infrastructure for the approval, which is not the case. What those other council people are trying to get me to do is actually take the infrastructure and the road widening and the bike path and everything well past my boundary, which my lawyer is saying isn't allowed under Section 129A of the Planning Act. And so all I'm asking is just to take it to my boundary. And so next minute I'm being yelled at. In the end, we made up, but many lessons were learned yesterday. The main lesson is get rid of it so you can just concentrate on venture, because you're less likely to get yelled at. Is that true though?
Yeah, less likely to get yelled at. People just talk about you behind your back.
Yeah, okay, there you go. So this is a chart of the number of leveraged ETFs. This is an exponential rise of ETFs taking leverage and then buying on the open market. And we wonder why we have some drivers. Like for listeners at home, like in 2011, there were like 80 of them. There's now 701. And it's growing in a straight line up. And so this is another chart going back to 1998. what this is showing the ratio of margin debt plus leveraged ETF assets under management as a ratio to the M2 money supply. And where it's peaked, where we're at the moment, it peaked in 2000, just before the 2001 crash. It peaked just before the global financial crisis. And now we're above the financial crisis, heading like we're almost at what we were at the last tech crash. And so
that's the ratio to M2, and that's even after all that fiscal printing. That's
yes, even after all of that, this is the ratio.
Wow.
Investors are very much flowing into leverage, and this is a picture for those at home. It's showing, essentially it's trying to describe what they call breadth. So on an up day, what is the number of the S&P that went up for their percentage change? And we have, in last week, we hit the lowest breadth in history, where on an up day, there were 300 companies that went down. So it means that the majority of the up is coming from the minority of them. And that people put forward as a bit of a risk that fewer and fewer companies are holding up this market. And so if you've got leverage on leverage and you've got a lot of the companies are going down and a few are going up, like I think that's the term house of cards. But here's some opposite to that. This is the margins going back to 1991 of S&P 500 companies. And whilst it's cyclical, it has been stepping up decade after decade. And so back in the 90s, the average margin was like 5.6. Then in the 2000s, it stepped up to 6. Then in the 2010s, it stepped up to 8.8. The 2020s is 10.3, and we're currently at 11.3. The underlying earnings and margins of these companies are creeping up. So I just put that as a bit of as an opposite thing here, that it's not exactly like for like, and you can't just go and take a couple of scary things and sort of extrapolate it out, because we do live in an exponential world. And so I think you got to be a little careful saying, oh, because it happened in the past, it's going to happen again. Well, that once you enter an exponential curve, that can be a little bit different. And I saw this post by Jack Schultz. He said, the internet era began with the release of Netscape in 1994. The AI boom, he says, began with the release of ChatGPT in 2022. Both markets have seen a remarkably similar stock market, with the NASDAQ up over 100% in both cases, 728 days after the release. So what he did is he took effectively the 0 point is ChatGPT being released and Netscape being released, and then he's plotted the NASDAQ. And when you have a look at the overlay of that, we are remarkably similar. And if we are in the early stages of the AI boom, like we were for Netscape and the original tech boom, we've got a long way to run up, but it's going to be a very volatile position. There was still on that journey up 50% drawdowns. But this crop of investors don't know if they can even spell drawdown, let alone have really experienced a true drawdown. All right, there was some drawdown stuff in like 22, but it was pretty mild compared to history. So it's going to be really interesting to see how that plays out. But that chart's going to be on the webpage. I think it's interesting. But I think with a lot of these things, right, this whole idea of absolutes and, oh, now I'll sell, now I'll buy, I think it's just more like just have some awareness of the environment you're heading into. And often it's just fucking around at the edges and the margins. It's not trying to do these wild swings and trying to time the market. It's just sort of like, what is the season that we're heading into? Now, AI takes a lot of power. This is the cost per watt of nuclear reactors in the US versus China going back to the 70s. So the US started in the 70s, whereas China only started in the 90s. Have a look at the cost for the US nuclear power is just up and to the right, whereas China, it's down and to the right. Their prices are increasing. And have a look at the amount under construction in China and the absolute lack under construction in the US. But no wonder, it's the cost in the US is just incredible. And now if a core input to AI is power and we don't have it, It's going to be an interesting future.
Yeah, this is an arms race.
Yeah. Well, someone's winning and someone's losing. So I just need to test your eyesights based on certain things. So for those at home, this is a picture. Needs water, needs sleep, has a cold, low blood sugar, needs food, aren't creating enough shareholder value. So can any of you not see a number? And could you tell me which one it is?
This is brilliant.
So I can, yeah. So according to this particular study, I'm not adding enough shareholder value because I can't see it. And I think that would be voted as correct. And that is it.
Love it.
What are
Really
you
good.
looking forward to? Oh, well, don't come at me at once.
I have a weekend where there's nothing on and I don't have to look at houses. So but now we're going to be spending it packing. But I'm actually just looking forward to a nice weekend. And then next week we have InvestFest. So heading down the Goldie for that. And we'll have Elizabeth Varley, our venture partner in London, out as well next week. So there's a fair bit on.
I'm looking forward to Aaron working out whether it's your current living environment that has... Ash and Jack, confirm for me you can hear that rumble coming through Aaron's microphone time to time.
What is the rumble? Is it there now?
Whenever you touch the desk. Just touch the desk lightly.
That?
Can you hear it?
Really?
Yeah. And so that increases my edit time and that
I'll just
decreases
sit
the
like
listener
this.
satisfaction. So that's what I'm... Well, that's good. So you're going to be packing, getting ready.
Back and getting ready. Yep. And then looking forward to seeing everyone on the Gold Coast.
Jack?
I got Jed down this weekend from the Goldie, so showing him around Adelaide,
Jed.
and then yeah,
I want the
Content
update,
creator,
Jack, how business is going.
Yeah.
all over the shop. It's just that hype cycle, like continuously at the moment for him, but he's going well. Got a lot of free time, so he's just come down, and then just going to show him around tomorrow, and it's like really good weather in Adelaide, so it's like perfect timing.
What are you going to do, Jack? What's on the list?
Tomorrow we're just drinking beers at the yacht club. So
But can you make like a little Insta reel with like the voiceover in the background? Do it as like a come and spend a day with me. And day. Come and spend the day with me and my mate Jed.
yeah, I'll try and convince him.
When does he get in?
He's already in. He got in on Wednesday night.
Nice. Maybe you could go to the market or something in the morning. It's really nice.
Yeah, as if.
Or some brekkie.
Yeah, we're going 5 a.m. gym and then going like to the beach, show him Seacliff, and then pretty much yacht club all day.
Okay.
To be young again. What are you looking forward to, Ash?
What am I looking forward to? Oh, I've got a wine wankers dinner tomorrow night. I'm very excited. I think it's very on brand. So I have a group of friends who...
You'll have fun.
Yeah, who are all well aware that they're wankers when it comes to drinking wine. And so we do a dinner maybe once a quarter and we all have to try to outdo each other with the bottle that we bring.
Will there be any lumber?
No, it's a French dinner. So no...
What colour cask does French wine come in?
Yeah, we have such different exposure. Yes, so that's really starting. I don't have to cook. And I just get to rock up, bring a bottle of wine, drink good booze. And yeah, with people who won't think that the way I talk about wine is ridiculous. So that'll be fun. And tonight, Jack, we're in a Summertown. Summertown's got tacos and live music and drinks on flow.
Yeah, nice. Is your lumbar, is that like a goon sack? What is it?
Yeah.
So
in the Mackenzie household. Yeah.
Lumber is a very big brand with a very big portfolio, just for the record.
Is it?
That has some very well-established, high-priced, high-profile, delicious wine.
In my parents' house, me growing up, petrol was always more expensive than what my parents were drinking. And there was always the red cask and the yellow cask, and then there was always the pillow for us to go and play with after. So
my mum was one of the marketers who came up with the good sack.
Well, we thank her for
that's
her
an achievement.
Yeah, that's iconic.
Lord, have her.
Did she get an Australia Day award for that?
What were you going to say, Jack?
I was going to say, my mum only drinks Bundaberg rum, so that says a little bit about my family.
A lot can be deduced from the drink choices. So
hold on, I'm gonna compare versus.
what are we looking at? Oh, Ash.
That is impressive.
For
That's
listeners
the
at home, Ash
that's
has a
the
whole
drink
wine
mark.
wall.
You can't have the things for aging there. That's the things that have to be drunk. It's not temperature controlled. But
And the best part of that is that's a tax write-off right there on your wall.
Well, I got 2 missed calls from a portfolio founder that is keen to have a chat. So
get to work, add some shareholder
lump-
value.
I might just check my calendar first, just to see if
Make sure you
I
got no
have-
conflicts.
I don't have a conflict, and then I'll call him back.
Make sure you
All right.
check all your calendars also.
Yeah,
Yeah.
true. All right, team. See ya.
All right,
Thanks,
see you
Dave.
guys.
Bye.